Hello, clients and friends. This is Billy Doughty from Doughty Financial. It's my pleasure to welcome you to our third quarter economic review. At our firm, we partner with clients and believe an educated client is our best client. While we always try our best to help you when it comes to your finances, we believe that knowledge is power. One of our missions is to share with you any knowledge that can better help you make an informed decision. The third quarter of 2022 was a very rough one for equities. After an early summer of equities advancing, late August and September saw markets retreating. Equity markets during the quarter continued to be highly volatile and reactive to news of slowing economic growth, elevated inflation, and weakening fiscal and monetary stimulus. The S&P 500 ended the third quarter down 5.3%, and the Dow closed the quarter down 6.7%. Both indexes finished at a 52-week low, and in September, they both experienced their worst month since the pandemic-driven declines in March of 2020. Downward movements are a part of the investment experience, and after a rough three quarters in 2022, the S&P 500 has fallen more than 22% from its record high. Bonds have also struggled in 2022, and the S&P U.S. Bond Index has lost around 14% since January. When it comes to equities, we believe that long-term investing is the best strategy. When you look at the S&P 500 for the one-year period from September 2021 to September 2022, it is down. But when you review a 5-year period, it is up. A 10-year period shows a nice gain as well. And a 40-year shows an even better advance. Again, equities should be considered long-term investments. Got a little ahead of ourselves. It's always helpful for investors to review the basics of bear and bull markets. We're now in a bear market. A bear market is defined as a prolonged drop in investment prices. Generally, a bear market happens when a broad market index falls by 20% or more from its most recent high. Bear markets often happen during periods of economic slowdown and typically include higher rates of unemployment. During bear markets, investors want to sell, often fleeing for the safety of cash or fixed income securities. An extended period in the market when overall investment prices are on the rise is commonly referred to as a bull market. Typically, in a bull market, confidence is soaring and investors are eager to buy or hold onto securities. Excuse me. Excuse me. When moves of 20% or more from a recent peak or low occur, it is typically referred to as an official bear or bull market. While there are many factors that can affect the movement of equity markets, here are 4 major equity market concerns at this time. The continuation of rising inflation rates, further interest rate changes, recession concerns, and geopolitical unrest. These items can be major factors in determining the future direction of the equity markets. In 2022, we have been experiencing the fastest rise of inflation since the 80s. Despite the Fed's effort to slow down the runaway train, the rate of inflation is still strong. With September's year-over-year inflation rate being 8.2%, policymakers still have a long battle ahead of them to try to bring inflation to a more stable pace. Americans continue to feel the pinch of inflation. Anyone who drives, eats, turns on the lights, swipes a credit card, or has living accommodations is experiencing the effects of inflation. The 4 major areas most Americans are feeling the pressure is at the grocery store, the gas pump, their electricity bill, and in housing costs, whether they are renting or buying. Raising interest rates are how the Fed fights inflation. As the chart shows, interest rates, like inflation, ran very high in the 70s and 80s. We're still nowhere near those highs, but during the 2010s, we got very comfortable with the federal rate being at or near zero. Now the Fed funds rate, which influences other interest rates, is again becoming a concern for Americans. Most analysts are expecting interest rates to continue to rise. There's a lot of talk about a recession. A recession is technically defined as having 2 successive quarters of economic decline. Empirically, with equity markets showing 3 quarters of decline, we are in recession territory. However, with employment numbers still in good shape, some companies showing decent economic earnings, and the housing market still healthy, the economy still has some areas of strength. Fed Chairman Powell addressed recession fears during a press conference following the September Fed meeting. He shared that no one knows whether this process will lead to a recession or, if so, how significant that recession would be. Regardless of whether we indeed will experience even tougher times, investors should understand that volatility is likely to be here for a while. Equity markets do not like uncertainty, and with the ongoing war between Russia and the Ukraine and concerns over a major conflict with China and Taiwan, geopolitical unrest continue to be something we are keeping a watchful eye on. Here are some of the main items we hope you take away from the brief equity market review. Caution is still the principal notion for investors. Inflation continues to be a catalyst for concern. Interest rates look like they will be continuing to rise. We are in recession territory. Long-term investing is a key strategy with equity markets. And as always, we are here to help you. This might be an ideal time to review words of wisdom from 2 of the most legendary investors of all time. Warren Buffett has famously said, "The stock market is a device for transferring money from the impatient to the patient." His business partner, Charlie Munger, said, "It's waiting that helps you as an investor." And a lot of people just can't stand to wait. And again, Warren Buffett said, "Always invest for the long term." Staying the course and adhering to a well-devised plan focused on long-term goals has historically served investors well. Having a comprehensive financial plan takes into consideration how you will react to each cycle before it happens. This helps you make the best non-emotional, non-hasty decisions for your hard-earned money. Investors should focus on their personal time horizons, goals, and risk appetite. This current market environment is most certainly testing the disciplines of investor. Some investors panic and jump ship during times of volatility, while others choose to ride it out and wait for calmer waters. Which mindset do you have? It's helpful to look back on history and keep things in perspective. On September 28, 2022, New York Yankees slugger Aaron Judge reached 61 home runs to tie Roger Maris's 61-year-old American League home run record. That same day, the S&P 500 hit a new low for 2022, closing at 3,640. When Roger Maris set his record on September 28, 1961, the S&P 500 closed at 68. The current cycle we are experiencing may take some time. That's why we continue to stand by our recommendation to proceed with caution. Please call our office to discuss any concerns or ideas you have or bring them up at your next scheduled meeting. We always recommend connecting with us so we can help determine the best strategy for you. There are often other factors to consider, including tax ramifications, increased risks, and time horizon changes when altering anything in your financial plan. These are challenging times for investors, and we want you to be comfortable knowing that we are staying apprised of any situations that may affect your situation. Having a proactive approach to your financial goals and a solid investment strategy is part of the overall client experience we provide. While we cannot control financial markets, inflation, or interest rates, we are watching them carefully. As always, we appreciate the opportunity to assist you and your financial matters. We appreciate our clients. As a client benefit, you can add names to our distribution list to receive newsletters and presentations. We hope you will take advantage of this and add 2 names or more to our list. And we greatly appreciate all the positive feedback we've gotten on our newsletters and videos. If you're not getting any of either, please let us know. One of our goals for 2022 and beyond is to continue to help others. Some of our best clients were referred to us by existing clients. So please feel comfortable letting us know the names of anyone when you feel could benefit from our services or information. Again, one of our primary goals is to keep clients informed, and we appreciate you watching our update. Please call if you have any questions.